There's a record you can access in roughly 5 minutes. And for many people over the age of 65, it leads directly to a higher social security payment. I'm not referring to a one-time bonus or any kind of reimbursement. I'm talking about a permanently increased payment arriving every single month for the remainder of your life. And here's what makes this so frustrating. The reason the majority of people never collect that money isn't because they fail to qualify. It's because no one ever informed them this record existed or pointed them toward the one specific thing inside it they actually need to find. Because simply pulling the record up isn't what increases your payment. Knowing the precise line to examine once it's open is what increases your payment. Miss that step and you walk straight past money that was rightfully yours the entire time. So in this video, I'll take you through exactly what this record is, where you can find it, and the precise thing to look for inside it that can put more money in your pocket each and every month. I'll also walk you through the mistakes that are quietly reducing millions of Americans' checks, who is most likely to have one of those mistakes sitting on their record at this very moment, and the straightforward form that corrects it. Stay with me through the end because I'm going to share several additional ways to increase your check beyond simply fixing an error, and one of them applies to nearly everyone watching right now. This is genuine money. It belongs to you, and by the time this video is over, you'll know precisely how to go and claim it. I'm Weston. I'm an estate attorney, and for over 15 years I've sat across from retirees going through their finances one line at a time. And the single most recurring thing I encounter is honest, hard-working individuals being paid less than they actually earned every single month because of a number on a government record that nobody ever thought to verify. They invested their entire working lives earning that benefit, and a quiet mistake, sometimes decades old, is trimming money off their check without them ever being aware of it. I want to make absolutely sure that isn't happening to you. What this record actually is. Let's begin with what this record actually is, because once you understand it, everything else clicks into place. It's your social security statement. It's free, and it lives inside an online account called My Social Security on the official government website, ssa.gov. If you've never created one, it takes approximately 5 minutes. Once you're logged in, your statement is right there waiting for you. And inside that statement is something most people have genuinely never laid eyes on in their entire lives. Your complete earnings history. Every year you worked and contributed to Social Security, going all the way back to your very first job as a young person, listed out with a dollar figure alongside each one. Here's why that history carries so much weight. Most people assume Social Security looks at their final few years of employment or simply averages everything they've ever made throughout their career. That's not how the system actually operates. Social Security takes your 35 highest earning years, adjusts each one to account for wage inflation, averages them together into a figure known as your average indexed monthly earnings, and then runs that number through a formula to produce your monthly payment. That 35-year average is the single most important number in your entire Social Security calculation. Your whole benefit is constructed on top of it. Here's what that means when you put it into practice. Say one of those 35 years, a year you worked full-time for solid wages, is sitting on your record as a zero or as a fraction of what you genuinely earned. That low number gets averaged in alongside the rest and pulls your entire average down. And because your check is calculated directly from that average, one flawed year quietly reduces every payment you'll ever receive for the remainder of your life. It's somewhat like one poor grade dragging down a lifetime GPA, except this average determines how much money you actually live on throughout retirement. That's precisely why people who find and fix even a single incorrect year often experience a real jump in their benefit amount. They're not receiving a bonus. They're finally getting the check they should have been receiving all along. And the only place you can actually view the raw year-by-year figures behind that average, the real numbers going back decades, is inside that statement. Your check is calculated from those numbers, yet you never see them unless you open the document and look for yourself. Why errors happen? So why does simply reviewing your statement lead to a larger check for so many people? Because every one of those numbers originated from payroll reports your employers submitted across the entire span of your working life. Decades of reports from every position you ever held, And sometimes those reports contained mistakes. A year where a payroll employee entered the wrong figure. A year recorded far below what you genuinely made. A year that appears as a flat zero, even though you know with certainty you were working the entire time. Every one of those errors drags your 35-year average downward, which means the check you're living on is smaller than it's meant to be, and frequently not by a trivial amount. Mistakes like these can shift a monthly benefit by a meaningful sum, and even a modest monthly shortfall adds up rapidly. A $100 per month gap equals $1,200 annually. And across a 20-year retirement, that's roughly $24,000 lost to a single bad year sitting on your record. If there are 2 or 3 flawed years resting there, the math compounds quickly. Here's the part that should motivate you to take action. The Social Security Administration does not proactively catch these errors on your behalf. There's no automatic audit of your record, no alert system, no letter notifying you that something appears incorrect. The data gets entered, your benefit gets calculated from it. And unless you personally open your statement and compare it against your own records, that error sits there silently for years, reducing your payment the entire time. The money doesn't come searching for you, you have to go searching for it. Who's most likely to have an error? So who is most likely to have one of these mistakes sitting on their record right now? If you recognise yourself anywhere in this list, it's worth checking this week. First, anyone who worked for a small business, particularly back in the 1980s and 1990s, when much of the payroll was managed by hand using paper ledgers rather than software. Human error was simply far more prevalent back then. Second, anyone who was ever self-employed. Freelancers, independent contractors, and small business owners who paid self-employment tax frequently have earnings reported in ways that leave more room for a year to be misrecorded or dropped entirely. Third, anyone who changed jobs frequently. Each new employer represented another opportunity for someone in a payroll office to mistype a social security number or inaccurately report earnings. Fourth, and this one gets overlooked constantly, women who changed their last name following a marriage or divorce, where the updated name was never fully registered with Social Security. If the name your employer reported doesn't align with the name on file at the SSA, those earnings can fail to attach to your record altogether. They simply sit somewhere in the system, unclaimed and uncredited. Years of genuine work and real wages simply never counted toward your benefit. If you've ever changed your name, this is among the most critical things you can verify. 0 years and how to address them. There's one additional detail worth understanding. If you have fewer than 35 years of recorded earnings, which is common for people who stepped away from the workforce to raise children, return to school, care for an aging parent, or who held a position not covered by Social Security, the system fills every missing year with a 0 to arrive at 35. Those zeros get averaged in and pull your benefit down considerably. But here's where the opportunity lies. Sometimes those empty years weren't actually empty at all. Sometimes you genuinely were working during that period, and the earnings simply never made it onto your record correctly. Finding even one real working year that's displaying as a 0 and having it corrected can meaningfully raise your monthly payment. Find 2 or 3, and you're looking at a real and lasting increase to your benefit. 2 real examples. Let me make this concrete. I'll refer to one client as Harold. In the late 1990s, Harold spent 3 years working for a small construction company. Solid wages, honest labour. Decades later, right before he retired, someone finally told him to pull his Social Security statement and actually read through it. When he did, he noticed those 3 construction years were recorded at roughly 60% of what he had actually earned. The owner had managed payroll by hand and had been submitting the wrong figures year after year. Harold had never known a thing about it. He gathered whatever old paperwork he still had access to, filed a correction with Social Security, and his monthly payment rose by over $300 for the rest of his life. That money had been sitting there uncollected for nearly 30 years. The only thing that changed was that one afternoon, he finally looked. Now let me tell you about someone I'll call Linda, because her situation is the one that concerns me most, and it may be the most widespread of all. Linda married young and took her husband's last name, working under it for almost 15 years. Later she divorced, changed her name again, and continued working without giving it a second thought. Decades later, when she finally pulled her statement, she discovered a stretch of years in the middle of her career recorded far lower than she remembered, with a couple of years appearing nearly blank. What had occurred was straightforward. During her name changes, some of her earnings had been reported under a name that no longer matched her social security record, so that money never attached to her account. It sat somewhere in the system, credited to no one, for over 20 years. Real paychecks, real work, simply uncounted, reducing her benefit the entire time. Once she brought in her old tax returns and had the record corrected, her benefit rose meaningfully for the remainder of her life. If you're a woman who has ever changed your name, this applies directly to your situation. It's worth verifying, and you may be owed more than you currently realise. Beyond fixing errors. Other ways to raise your check. Correcting an error is the single biggest opportunity for many of you, but it certainly isn't the only one. Here are several other legitimate methods to raise your monthly benefit. The first connects directly back to those 0 years. If your record still has zeros sitting within your top 35 years, you can replace them. Every additional year you work, even part-time, even later in life, can push a 0 or a very low early career year out of your 35-year calculation and raise your overall average. For some people, one additional year of employment is worth considerably more to their monthly payment than they would ever expect. Second, timing carries enormous weight, and your statement shows you the exact numbers. If you haven't started collecting your benefit yet, every year you delay past your full retirement age increases your payment by approximately 8% annually, all the way up to age 70. That's a guaranteed increase you simply cannot find anywhere else, and your statement lays out precisely what waiting is worth for your specific individual situation. Third, if you're married, divorced after a lengthy marriage, or widowed, there may be a larger benefit available to you than the one connected to your own earnings record. A spouse can potentially claim up to half of the higher earner's benefit, and a widow or widower generally keeps whichever of the two payments is larger. Many people never explore this possibility, simply assuming the benefit they're already collecting is the only one available to them. It's genuinely worth confirming. Every single one of these represents a legitimate path to a larger check, and every one of them begins the same way, by opening your statement and truly understanding what it's communicating to you. What to do step by step. Before you begin, gather anything that documents what you actually earned across your working years. Old W-2 forms, old tax returns, old pay stubs, or even a clear recollection of which years you held which positions. Pull everything into one folder before you sit down. The more documentation you can provide, the stronger your case becomes. If there's a box of old financial papers sitting in a closet somewhere, hold on to it. It could represent real money. Step 1. Go to ssa.gov and create your My Social Security account if you don't already have one. It's free. It's the official government website, and it takes roughly 5 minutes. Use only the genuine ssa.gov. Don't click on advertisements or third-party links promising to handle this process for you. Step 2. Open your statement and locate the earnings history section. You'll see every year going back to your first job, with a dollar figure listed next to each one. Step 3, and this is the part that actually makes a difference. Compare those numbers year by year against your own personal records. Old W-2s, tax returns, pay stubs, anything you've held on to. You're looking for 3 specific things. Years where the figure is clearly lower than what you actually earned. Years displaying a 0 when you know you are actively working. And years that are missing from the list entirely. Pay the closest attention to your highest earning years, since those carry the greatest weight within your 35-year average. An error in a high earning year damages your check far more significantly than an error in a low earning one. Step 4. If you identify a discrepancy, the form you'll need is called the Request for Correction of Earnings. Record SSA Form 708R, available directly from the Social Security Administration. Submit it along with documentation of what you genuinely earned. U2 forms are the strongest evidence you can provide, and here's something most people are unaware of. Even if you discarded your old paperwork years ago, the SSA itself can retrieve copies of your W-2s from past decades, specifically for the purpose of correcting your earnings record. So a missing shoebox of old tax documents is not a reason to abandon this effort. Step 5. Be patient but remain persistent. Corrections typically require a couple of months to fully process. Once approved, your benefit is recalculated, and the higher amount begins appearing in your future payments. Generally, you have a window of just over 3 years to correct recent errors through the standard process. But don't let an older error discourage you from acting. Mistakes from 10, 20, even 30 years ago can frequently still be corrected with the right supporting documentation, and in certain cases fall under exceptions to that time limit, such as fraud or an employer's own delayed reporting. Never assume something is too old to fix. If you have the proof, it is absolutely worth filing. If you're not comfortable online, if you're thinking, Weston, I'm not confident with computers, I wouldn't even know where to begin setting up an account. I hear you completely, and I don't want that to be the reason you leave thousands of dollars uncollected. You don't have to handle this online, and you certainly don't have to handle it by yourself. Call Social Security directly at 1-800-077-21213 and request that they mail you a copy of your earnings statement and assist you in reviewing your record. You can also visit your nearest Social Security office in person and sit down with a real person who can pull everything up alongside you. And if you have a son, daughter, grandchild, or friend who is comfortable navigating computers, this makes a perfect afternoon project to tackle together. There's no shame whatsoever in asking for help. The only real mistake is allowing the money to sit there unclaimed because the process feels overwhelming. One serious warning. Wherever money is owed to older Americans, someone eventually appears trying to take a portion of it. You never need to pay anyone to do this. Not a fee, not a percentage of your recovery, nothing at all. Reviewing your statement and submitting a correction is entirely free, and you do it directly through Social Security. If you ever encounter an advertisement or receive a phone call from a company offering to recover your Social Security funds in exchange for a cut, hang up immediately. They are simply performing these same free steps and keeping a portion of your money for themselves. The only website you need is the genuine ssa.gov. And if you'd like a second set of eyes on anything, stick to a trusted family member or a legitimate, no-commission advisor. Closing. Your Social Security payment is built upon decades of earnings data. If even one line of it is incorrect, your check is smaller than it should be, and it remains that way every single month until you locate the error and fix it. Nobody else is going to do this on your behalf, but the document that allows you to check it is free. It's sitting in your account right now, and it's 5 minutes away. Most people spend more time reviewing a grocery receipt than they do examining the one record that determines their income for the rest of their lives. Don't be one of those people. So today, do this one thing. Go to ssa.gov, open your statement, and read through your earnings history line by line. If something fails to match what you know you genuinely earned, file the correction. That's the entire process. A free document transforming into a larger check. And if this video helped you, do one thing for me. Share it with someone you care about who is already on Social Security or getting close to it, especially anyone who is self-employed, worked for a small business, or has ever changed their name. They are the most likely to be owed this money and the least likely to know it exists. The government isn't going to make that phone call for them.